FOMC meeting, and feels good to see that the Federal Open Market Committee, top monetary policy brass in the United States, when they converge, they discuss everything monetary policy. FOMC is made up of 12 voting members, 7 members of the Board of Governors, including the chair, the president of New York Fed, permanent voting member, 4 of the remaining 11 regional Fed bank presidents are rotational. So in total, there are 19 total participants who discuss policy, but only 12 vote at each time FOMC have meeting, especially voting as regards to monetary policy, interest rate change, and rate has remained the same, 3.5, 3.75, and the voting went 9-3. We have seen 3 dissents, and the 3 dissents are pushing and agitating for 0.25 rate hike. And I think the members of Fed who dissent are from Cleveland Fed president, Minneapolis Fed president, and Dallas Fed president, Lorie Logan. So they are pushing for 0.25 rate hike. But the most important thing, and the market paid attention, was Kevin Warsh commentary. The chairman, Kevin Warsh, under his leadership, has emphasized a strong commitment to price stability. And he said he has no tolerance for keeping inflation above 2% because very soon the House will call him to defend himself. So he has zero tolerance for inflation being above 2%. And also stating that bringing inflation below 2% cannot be rocket science. It has to take time. It will take time. So he's working on it. But the most important thing is having some members of the family dissent. That shows that that's also a hawkish move. Thank God everybody didn't agree on keeping rate the same. So we have 3 dissent in the House. It shows that rate could likely be tightened. We could likely, before the end of the year, maybe get that 0.25 based on the arguments from maybe next monetary policy outlook. So the most important thing is to see that there was no dot plot released at the meeting, and we're looking at maybe next time. But the most important thing is to see the rhetorics that the head of the Federal Reserve sound a little bit hawkish, and we see that gold rose and dropped again. Dollar index dropped and is picking back after hitting a 4-hour support. So it feels good to see that the rate has remained the same. Now the next thing is to look at the structure of the market, and to buttress my point that market is well calibrated. Every time you see anything priced in the market is being priced, is being calibrated. Like you see here, this is a projection for buy on 30 minutes, on 40 minutes is valid. On 30 minutes, you see the structure clearly on 30 minutes. So you see here, we have a structure here, breakout of a supply roof, price returns here, demand floor 1, demand floor 2, demand floor 3, and we return here, demand floor 4, and we have moved from there. So it only tells us that the market has been priced. That's what it means. And if you take this structure and if you take this structure and you place it on the line chart close on 40 minutes, it gives you exactly where price reacted here. So you see. So I already knew price was going to react at 1115. And the market had multiple confluence at that level where we reacted before. That's the second confluence. Market love confluence. The higher the confluence, the greater the probability of reaction in the zone. This is the second confluence bearing weakness to 1115. So when we clone the structure from the bottom, It gave us that roof exactly at that point, close. So you can actually do your own. You can make your zone every time you make a trend line. Make a zone for the trend line in order not to be, you know, taken unaware by the market. If you don't put zone, the market will react, and you're not gonna get a trigger. So every time you do, now this is the zone of the market reaction. So market have done just two things simply: buy, sell, buy, hold, sell, hold. The market came into 3,994, bought, sold at 4,115.45. Two things that you need to do for the day to keep it clean. This is what happened today. And to further subdivide it, we had a New York section Wednesday. We're going to look at all the 1300s New York reaction. So you see we have a recent reaction here. This is a New York candle 1300. So I'm doing a research on all New York price action. So hopefully before the end of the week, I want to do 20-year analysis of New York time. I believe it's going to help our strategy when I look into that. I want to look into 20 years what New York sessions do all the time. So I will draw a point, and anything I notice, I will come online and tell you. Already I know certain things, but I need evidence. So I do not want to say things without evidence. I need evidence. Without evidence, I don't want to talk. But already I know what New York session do. So we all know. So we're going to come up with some examples of the likely things that happen during New York time. And we have seen price here after break of two supply roof 1, supply roof 2, and you see price return. I'm thinking as the market open, we'll get a rejection at 89. 89 is not bad to get rejected back. I want this market to pull back at where we already had a pullback. So I'm looking at it, if that's going to be possible. As the market opens, we'll have a reaction here, we'll have a reaction here, we'll have a reaction here, we'll have a reaction here. A broken demand floor became a supply roof 1, supply roof 2, and we have seen the market drop from there. And we'll have a temporary descending trend line. So I don't know if this is going to be applicable. I do hope it's going to be applicable. I want the market to pull back from here. It might pull back from here. The probability is very high. So let's see if it makes a pull up, then drop from there. The reason this strength of structure comes from here: resistance structure 1, resistance structure 2, break out of structure, break out of structure. If price returns 70, I think most likely from that level 70, the market could pull back 70. And a bridge of 70 will finally, the rhetorics of the chairman is a little bit hawkish, moderately hawkish. Yes, moderately hawkish. And as long as rate is held the same, rate being held the same, it's equivalent to even 0.25. So keeping rate the same, it's also a bullish move. You can't call that a bearish move. It's not a bearish move, it's a bullish move. And I think gold will consolidate for a while. Then buyers will decide on what they want to do with the information on the possible outlook. So this is what we have. And in a broader context, I want to see a play on this descending trend line. This is where I anticipate market reset. So I do hope that on 3 hours, let's see. and 3 hours, we have a structure here. So if the market pulls back due to the Fed commentary, that's a little bit hawkish, moderately hawkish. I expect that this should be area where the market will reset itself. So we're going to keep it and watch as the market opens. We'll be marching into Asian session and Sydney. We don't know what they're up to, but this is the price action that took place today. This is what we have. So we had only 3 beautiful opportunity. Sell after demand floor 1, demand floor 2, break of structure, supply roof, break of a supply roof, demand floor 1, break of a demand floor, supply roof 1, supply roof 2. This is the trade we had here. We sold into demand and bought into supply and returned back into demand, and we are facing supply. So it's technical that most likely we could get, if we don't get a rejection here, then it's going to be 85, 89 from that level. I think we're going to drop from there. It's relative. We also have to see what the United States Treasury bond yield and the dollar index is doing at the moment. So this will give us a clear directional bias in the direction of market. So that's a summary of the market today.